Whether it's trade, whether it's Brexit, whether it's a little bit more uncertain geopolitical environment, I think there's no question that it's having an impact on sentiment. On the other hand, the overall nature of global growth, while a little bit decelerated from a year ago, is still okay, still solid. And in the context of that, if some of these issues, if we got a trade deal, if we in some way, shape, or form did make progress on Brexit, and there was a Brexit deal here, I think that could swing the sentiment back, quite quickly. But there's no question when I talk to CEOs, they're a little bit more concerned.
That was Goldman Sachs CEO David Solomon speaking to Wilfred Frost yesterday.
DJ Sal.
Yeah, that's right. He's a DJ as well. Joining us now for more to talk about the big market catalysts and what's working for investors. Drew Matus, Chief Market Strategist at MetLife Investment Management, and David Bahnsen, founder and CIO at the Bahnsen Group. We didn't make a picture of this S&P year-over-year percent change that you furnished to us, but I like it, and I'm going to describe it, and then you tell me what it's telling us. And that is, it shows in the third and fourth quarter of 2018 huge year-over-year gains, almost 30% one quarter, 17% the next quarter at the end of 18. For all of 2019, we almost flatlined. Mm-hmm. We flatlined at the same level as those really big gains. Now for next year, you're looking at 9% first quarter, 9.1% second quarter, 14% in the third quarter for earnings per share year over year. So it almost looks like they're re-accelerating from what was already a pretty high level. So are you saying this is bullish or not bullish?
Well, I'm saying it's what the analyst consensus expectations are for next year. And so therefore, if it doesn't happen, bulls will need a new thesis. The thesis requires you to believe earnings are going to accelerate.
Yeah, I believed this and thought it was bullish. So you're telling me that it sets up the market.
No, I do think it's bullish because I do think...
Sets up the market for disappointment?
I think it does set up the market for disappointment if things come back from that. What would make them come back from that is if you don't get a trade war done, if this CapEx deceleration is legitimate, if it's lasting. But I am bullish in the sense that I think there are certain pockets of value there that are still going to benefit. But no, I think that the chart that we don't have up on the screen, but that we're talking about, really shows how markets discount in advance the reality of earnings.
Take a shot of you talking to me again. Matt, can you lower this guy's chair, please? I mean, okay, you're like talking down to me like I'm, look at this. I mean, all I can say is yes, sir, no, sir. Come on, Matt, can we...
Yes.
How's that?
There we go. I feel right sized.
God almighty.
Lower.
Huh?
I think you want everybody, you want all the guests to be lower.
That's what I'd like. I know
you want all the guests to be lower.
But I thought we were going to grow the pie.
We're sitting here talking about earnings acceleration, and he's shrinking me in the chair. I don't know what that says for 2020.
Wealth redistribution.
Exactly. But I think that the bottom line answer, Joe, is that the market right now has priced in a lot of very good news. Yep. And the news is not likely to get better than the good news it's priced in, and it could be worse. So I think there's asymmetrical risk reward.
David, really quick, what about positioning, though? I hear what you're saying, but the investors are completely, in my opinion, underweight stocks. All the flows have gone into bonds. From a positioning standpoint and a psychological standpoint, it seems to me that there's a lot of bad news priced in.
Yeah, I think that there is a sentiment issue. People are still afraid of a shoe dropping, and that gives you the ability for markets to continue kind of advancing when that shoe doesn't drop.
Which shoe? Is it the first shoe or is it another shoe dropping?
I think that the trade war issue kind of has changed everything because all of a sudden it just gave people an excuse to have that uncertainty thesis. It lingers, and certainly we see it in the C-suite, businesses holding back in both confidence and expenditures. But it's also the multiples. You've never seen this delta between valuation and value and growth, and I don't really like that breakdown. I'm just using it because it's convenient. We want companies that are growing, that are out of value. I don't see those things as binary, but to us, the dividend growers are where you can pick a spot and not have excessive valuation.
How's the world looking to you?
I mean, if the consumer looks great, so the world looks great. And as far as I'm concerned, if you look at trade, you look at Brexit, we're starting to get some resolution in those issues. And it doesn't even have to be a good resolution. We just have to know what the new rules of the game are. And then people can price that in and they can figure out where they're going. The problem is you can't price in a lot of these risks now, because you just don't know. There's so many different ways that they could work out. And so as long as we get resolution in these issues, then that'll be a positive. And if the consumer stays in the ballgame, the U.S. economy is not going anywhere but somewhere good.
What do you think about rates? What's your view on rates?
I mean, my view on rates is that rates should be moving higher, but they, I mean, by any definition, they should be moving higher. There's just no reason they should be as low as they are. The Fed probably shouldn't be cutting rates right now, in my opinion.
You think they will, though, this month?
I think they will, but, we're 20 basis points away from their target for inflation, and we're cutting rates, and the unemployment rate's 3.5%. I mean, that makes me nervous. I'm not sure if it makes anyone else nervous. But I do think, the lower rate environment isn't helping. It's actually hurting. It's causing people to save more money, not less. It's keeping companies in business that shouldn't be in business. That's keeping people working at firms where they shouldn't be working and keeping productivity lower and wages lower. So everything that low wages do that's negative, or low interest rates do that's negative, actually makes you then believe you need to lower rates further in order to fix it. And that's how you get into the situation Japan got into and the Eurozone seems to be in.
Kind of makes sense. Yeah, you want people to think, all right, I don't need to be really worried. I can go get this job with higher wages. Otherwise, you don't see the wage increase that you're looking for. But I still don't. It almost sounded, if you're that worried about the Fed cutting, it sounds like you're going back to the days when we worried about inflation. And I still don't think we're not worrying about some type of inflationary spiral right now.
I wouldn't be worrying about inflation. I'm not worried about inflation.
You're worried about the effect on savers?
I'm worried about everyone else thinks there's no inflation. Right? And if you talk to people, they're like, inflation's dead. Right. Inflation's 20 basis points below the Fed's target.
All right, but
I mean, in any other Federal Reserve, the Federal Reserve people would have been out saying, we're hitting our target, we're done. Like, we're fine.
Well, in any other Federal Reserve, they also weren't targeting to even have 2% to begin with. There was a time where we actually thought not having inflation was sort of the point of sound money. And so I agree it isn't the inflationary issue, but the malinvestment that gets created.
That's what I was wondering, if you're talking about that, because we've had 10 years of trying to engender some inflation with QE infinity and low interest rate. We're still 20 basis points below. Does it seem like there's a structural inflation problem?
Well, QE infinity and negative interest rates and all those things.
Right, but people that thought debasing the currency was going to result in hyperinflation were on the wrong side, right? We know that now, don't we?
Absolutely.
Okay.
Clear as can be.
So you send me all this really good stuff, and then it's not going to happen. I mean, I wasn't expecting that.
Oh, I think that
I brought you down to the level, though, didn't I?
To where the earnings are. Well, no, I think that the earnings of 2020 are going to largely depend on how the trade war gets settled, and then we'll also see the election. That's going to be a big story.
Did he put himself up, Mac? Do you know? Did you notice he did that before?
It's way out of my pay grade. I couldn't figure out that chair.
All right. Thank you.